The Intelligent Investment Show live with Matt Dahl of ARPG in Las Vegas. I'm Garrett Lill of the Wealth Partners channel. Good to see you, Matt. Sounds like you've had a very busy week. It's almost over. So I'm always curious. So does your day end at market close, 1 o'clock Friday your time, or do you work till 4 o'clock your time, which takes you to 7 o'clock market time?
Well, when you love what you do, you never have to go to work.
There you go.
So I never stop working.
Never stop.
But I also never start working.
Yeah. No, I actually get that because I never, especially during COVID, I never stopped. Like the market closed and I just took a short little break and then went and watched the end of futures. And then as soon as the futures closed, I still basically went over my data all weekend until Sunday at 6 when the futures opened overseas. And then it was right back to it. Even though our market didn't open until 8 o'clock or 8 o'clock, good Lord, 9:30. I still was I was on the futures at 6 o'clock Sunday night. Right after football goes off, I've got futures on. So
yeah. Every night it's 6 o'clock here every night, 9 o'clock East Coast is the weekday nights. But on Sundays it's 3 o'clock here and 6 o'clock your time. So that's every night. That's every Sunday. Just what we do, right? Everyone's got to have their gig. So again, you love what you do. You never work a day in your life. No,
that's right. That's one of my dad's favorite things to say.
Corn flakes now. Thank you.
Yeah.
You're very pointy day.
Nice. Well, welcome back, everybody, viewers, listeners. Thanks for joining us. So, Matt, what's going on? We kind of left things last week in the middle of a conversation on AI and the future state of the future effects that AI could have on the economy. And then we were just talking a little bit before. There's a lot of we've talked about it a little bit on the show. There's a lot of things on your media outlets. Is it in an AI bubble? So plenty of stuff we can get into today.
Yeah, there's always good stuff to talk about, So, there's this. In fact, what's funny is I just got off the phone with a client, and we were going through his portfolio, and he goes, we seem to be having a lot of, we have a lot of tech in the portfolio. That's what we do, and a lot of it is, and he's an older gentleman, and he said there's a lot of these companies that are heavily involved in AI. And I said, of course. And then, of course, a lot of our positions are just our core positions. They're core positions across the board. One would even call them crowded trades. You know what I mean? Mm-hmm. It's NVIDIA, it's Microsoft, it's Google, it's Amazon, it's Salesforce, it's all those companies, right? Apple, you name it, across the board. Taiwan Semi, a lot of those that maintain those core positions in our portfolio. So, he said, well, I'm worried about, there's been a lot of talk about an AI bubble, this AI bubble. And, should we be worried about that? And I said, well, we should always be worried about something. That's kind of what I'm supposed to do. And then we joked about it. And, that old saying, you had one job. You had one job. That's my job. I had one job. And that's to worry about everything all the time. And that's my job. So I worry about everything all the time. So.
And you love your work, right?
I love my work. I love to worry. It's just, that's why see all this gray hair and those wrinkles. I'm only 22, but I love to worry. So I just had my 27th anniversary of my 22nd birthday. So
there you go. That's what I'm doing. I stopped counting birthdays years ago. Now I just celebrate the anniversary of my 21st every year. So I'm about, I'm not that far away. Actually, I'm less than a month away from celebrating my 19th anniversary of my 21st. So not looking forward to that one. Really, that you can do some simple math. That's not.
Yeah, happy 40th. That'll be fun. That'll be a good time. You know what? You should celebrate here. You should celebrate here with me.
That we've got to get that together. We've got to. we keep saying we got to. We need to do that. I don't know, man. Last time I went to Las Vegas, I ended up married. So it was planned though. But still, that's my only trip to Las Vegas was actually for my wedding.
Well, you might leave married, that could be the
happened last time. That's right. Happened last time. Yeah.
You can leave with a real good, like an athlete type girl. Just, you never know. There's
got a little bit of everything out there.
Choose from out here.
Yeah. A lot of variety.
Yeah. So, you're just not sure where the plane's going to end up when you leave. You might be going to her house or your house, and because no one's actually from here. No one actually lives here. It's just Las Vegas is just the Strip, and then we all just kind of float in the air.
Las Vegas is like what? I don't know what the. You'd be interested. I'd love to see like what the actual population of Las Vegas is compared to the average number of people in Las Vegas at a certain period of time. I mean, I don't know what the numbers are. Say there's 5 million people in Las Vegas at any given time, but there's only 500,000 residents because it's basically just full of non-residents all the time, isn't it?
No. I mean, we have a population here in Clark County about 2.4 million, if I believe, if I'm right. And I would say at any given time, we probably have about 100,000 people here, 150,000 people on the Strip.
Okay.
In the given hotels. I mean, you look at like Excalibur, that's a massive property, has 4,200 rooms, and so there's lots of hotels. I think we have several 100,000 rooms here that you can get. So I don't know that we have millions of rooms here. We have lots, but not so. But
seems like millions.
Yeah, but I mean, there's. I'm sure we can find you a place to lay your weary head.
I'm sure. So, what is we were talking about AI, and you said that there are. Would it be safe to? Am I paraphrasing it right to say that there are some couples? Good Lord, now you got me thinking. You got me all twisted. Some companies that may be in a bubble. That's what I do. I try to combine company into bubble, and I got couple. So, are there some companies that could be quote unquote bubble territory? I mean, I think to some extent there's always examples of companies that may be in bubbles, right? At the individual company level, there's always going to be individual bubbles. But are there cohorts of AI related companies that you could classify as bubble territory right now?
Well, let's step back a minute and define what is a bubble. Okay, and I don't mean the little thing you stick in the bottle and you blow a bubble and then you run around the backyard in summertime. What is an actual equity bubble, right? What that means is the prices are dislocated from its potential earnings. That's what that means. Okay, so if we're buying a company, let's say the S&P right now is trading at 22 and a half times earnings. Okay. If the S&P was only going to earn 5% over the next 2 or 3 years, and the market knew that, but it was still trading at 22 and a half, 23 times earnings. Well, the market's absolutely in a bubble. Okay. The price of the market has become fully dislocated from its ability to catch up to those earnings. Its earnings have no real ability to catch up to that price in any reasonable period of time. So what creates the bubble is people buying it because they think the price is just going to go up, not because the earnings are going to be there to support it. And then it creates its own momentum, and it effectively becomes the snake that eats itself. Okay, it packs itself with its own dynamite, if that makes sense. So that's what a bubble is. So you have to then step back and say, okay, well, where are the markets? What are those earnings? Okay, and where are the bubbles and where aren't the bubbles? Okay.
Yeah, and you're talking intrinsic value versus maybe extrinsic value. When you've got a company with a balance sheet, with cash, with earnings, with money, with tangible property, you can purchase things. You're purchasing stocks based on a multiple of that tangible benefit that you're getting from owning that company. But when you start to get into bubble territory, it's what we call speculation. You're only buying if that company. There's nothing supporting the price of that company except other people wanting to buy those shares. There is no underlying value of the company itself, relatively speaking. I mean, there may be something, minuscule, but I think of, an example of this was, not to say that it was a bubble or whatever, but the whole thing with GameStop a few years ago, where it went from like 20 to 500 in a weekend or a week or whatever it was, that was purely built on supply and demand of the market, enough people getting together and buying it that it caused the stock to go up based on, whatever reason they had for doing it. But nothing fundamentally changed in GameStop's, financial situation over that course of time. It was just people were buying it at 300 because they thought later they were going to be able to sell it for 350. It wasn't, it's worth 350 because based on its earnings, based on its cash flow, based on whatever, based on common market multiples, this times this should be 350. It was just we're buying it at 300 because later somebody else is going to offer us more for it.
Exactly. So what you were hoping for was to sell to the greater fool and hoping
Right.
not to be the greater fool. Right.
Right.
And that's what generates a bubble, right? Well, I think people are going to continue to buy this stock, be it GameStop, be it the AMC theaters, whatever it was during that time frame, so that I can sell it to an even greater fool down the road. That's what generates a bubble. In AI, I'm sure there are parts of that in AI, okay? Because I try to do my best, and back to the conversation I had with the client, our first job is to avoid the losers, right? We want to pick the winners. We want to find out where the earnings are coming from, and we want to find out where the earnings aren't coming from, and then try to avoid those areas. So, that's kind of the first part. So if you start with a general fundamental thesis, okay, where are the markets? We have this discussion. You always have to have a home plate, right? So the home plate is the S&P 500 or the NASDAQ or sort of both. Okay, the better home plate of the two is probably the S&P 500. S&P 500, the next 2 years growth looks like about 13.5% each year, 13.2, 13.8, depending on who you ask. All right, and that's okay. That's solid. We're sitting at 22.5 times earnings, so we're looking at about a PEG ratio somewhere in the neighborhood of about 1.5, 1.6 times. That's not too bad. Now let's look at the NASDAQ. 2026 earnings growth looks to be 22.9%. Okay, for the NASDAQ, that's really good. 2027 looks to be about 19. These are solid earnings growth. Okay, so if you look at those two different indices and you look at their earnings growth, we know that the NASDAQ is more tech leans more tech. Okay, and then you look into obviously the tech sector of the S&P 500. It's going to grow by about 25 and about 23 over the next 2 years. So okay, where is those earnings coming from? Of course, they're coming from obviously your mags. I know they've been the lag 7 lately, but they're obviously the mag 7. Obviously your Nvidia, your Apple, your Google, your Microsoft, your Teslas, all those companies, your Amazons. So you start there. And if you want to look at what is a bubble and what is not in a bubble, and let's kind of compare two different companies. Okay. Palantir, phenomenal company. Alex Karp, the guy is brilliant. It's a very, very, very good company. So we don't want to conflate an incredible company with an amazing product and service that they provide with the fact that stock might be overvalued and it might be in bubble territory. It might not be, but it looks like it could be. Okay. So, and you have NVIDIA, because NVIDIA is such a great benchmark to use. Okay. Because that is a poster child for everything AI. So of course, when people say AI is in a bubble, well, in the first place, everyone's going to look is NVIDIA, and people have seen, well, the stock price has gone from, has gone up 2,200% in the last, 5 years or whatever it is. So it's clearly in a bubble because it's gone up so much. NVIDIA is nowhere near a bubble. NVIDIA is damn near a value stock, in my opinion. Okay. So, if you compare and contrast those two companies, let's do that right now. Let's just look at the numbers and see what they say. Palantir trades at 132.7 times sales. Almost 133 times sales.
And do they even have a net profit right now?
Yeah, they're trading at 222 times earnings. So they do have earnings, okay. But they're pretty lean
and apparently good profit margins.
They have decent profit margins. Wait till you hear NVIDIA's. Okay. So let's take that earnings number, divide that into the growth rate of 22%. We're basically 11 times ratio on your multiple to your earnings growth. That's pretty high. That's very, very high. So bubble territory says it can pop and come back. I'm not saying that Palantir would go back and not return, but it might reprice itself because the market might be dislocated right now, and it could potentially reprice itself. And I could easily see it having itself and becoming being a more reasonable valuation there, right? And but it's not a bubble where it would pop and never come back. Now let's look at NVIDIA. Remember, Palantir 133 times sales, 222 times earnings, growing at 22%. NVIDIA is 27 times sales. 27 times sales. Still pretty high, but its earnings, 31. 30.9 actually. 30.9 times earnings. So that's a profit margin. Okay. That's what I like. That's good margin. Okay. And it's grown by 20% a year. So NVIDIA and Palantir effectively have the same growth rate, almost identical. Okay. And we're talking about one has, 8 times higher multiple on the earnings than the other one does. Okay. Now I'm not saying Palantir is in a bubble itself, but that looks like it could pop and come back down. Now, what happens when, let's say what does happen when Palantir reprices itself and removes some of that dislocation and gets into a normal growth to multiple ratio of even, I don't know, 3-4 times, right? And it's growing by, 22%. That means it's going to be about 80 to 100 times earnings. That would cut it more than in half. It'd lose about 60% of its value. Okay.
Well, if you pair it off with NVIDIA, because what would you say the growth rate was for NVIDIA? 20? Okay. So if you put Palantir at a 1.5 peg from a 10, 11 peg, that's an 85% drop.
It's bad. That's what I'm saying.
And the thing
I'm trying to put a shock absorber in this thing.
Yeah, I hear you.
I don't go
that route. I don't worry about shock absorbers. Like I'm here for the shock value and the shock factor. Right. So yeah, but
you're the shock jock.
That's right. The thing about that is that yes, if a stock, I'm not trying to pick on one in particular one and say anything is a bubble, but if a stock loses 85% of its value, it needs to gain 500% to get back to where it starts.
Yep.
Right. That's the thing. It's not like, oh, well, it was at 100 and now it'll go to 20. But it'll get back to 100. No, 20 to 100 is a big move. That takes a long time to usually to materialize, and that's just if it gets paired off with NVIDIA. So I guess the question I would have, maybe not so specifically to Palantir, but why? Why do two companies? What's so special about Palantir that would make an investor be willing to pay essentially 6 times as much as the market behemoth for at a particular period of time?
Palantir has a great narrative that surrounds it. It's an incredibly powerful software company that uses AI. It's its own proprietary, it's all proprietary in and of itself, and it does its primary objective is national defense. Okay, and it's cyber defense. Okay, and it's probably the best in the world at what it does. Okay, so and you have a CEO who's a CEO like a Steve Jobs, who's a CEO like a Elon Musk and Alex Karp. Okay, the guy is brilliant, and he's also not scared of anybody. Right, he'll get out there and tell you exactly what he thinks and exactly why you're wrong. Okay, so there's a lot of I think a lot of that stock price is built in Alex Karp. Okay, no different than when Tesla was trading at 900 times earnings. You're believing in Elon Musk, and there's nothing wrong with that. You're talking about brilliant men, brilliant leaders with incredible companies that are growing and growing and growing. But Tesla, as we know, it's a leaning bathtub stock. I know that I just made something up. It sloshes back and forth.
Yeah.
And you gotta. There's a lot of beta inside of that company, but it does over time point upward. Okay, Palantir I think will likely look very similar to Tesla. However, I think it could actually be a little bit more volatile than Tesla because this is trading at a very, very high multiple. Okay, but again, I still think we're in like the bottom of the first or top of the second inning of this whole AI revolution. Okay. Conversation I was having with the client this morning when he was concerned about, are we too heavy in tech or whatever? We have other positions around, of course. As I said, well, we talk about markets, we talk about earnings, and we talk about earnings growth. We talk about the sectors of the markets that what sectors of the markets are going to provide that growth. So there's going to be some sectors that contract. So our first job is to stay away from the losers, and then we want to find the winners, the winning sectors, and we want to find what companies inside those sectors are the superstars. That's kind of where we start. So, when you look at a company like NVIDIA or Microsoft or Google or whatever, we can track those those earnings growth, and we can get a pretty good idea where they're going to be in 2 years based on where those earnings are, where they're going to be. And now we're discounting them back, in my opinion, by about 3.25% instead of 6% or 5.5% like we were a couple years ago. So that makes a lot of those pretty attractive. So, when you start leaning into an AI or a tech-based portfolio, it's easy to kind of buy your high beta positions, hoping that it's going to go up, and it might. But I think if you look and you start with your fundamental side, okay, you're going to do okay, because there's a lot more left in NVIDIA. There's a lot more left in Microsoft. There's a lot more left in Broadcom. There's a lot more left in AMD. Okay, and again, NVIDIA is at 31 times earnings. Costco's at 47. Costco grows at 8%. NVIDIA grows at 20.
Yeah.
I mean, so if you want to talk about bubble territory, under those simple metrics, is Costco in a bubble? Sure, of course it is. Of course it is.
Well,
of course it's in a bubble, but it's not. But Costco's obviously not in a bubble. Costco, what you're buying with Costco is you pay a huge premium for that level of safety, but growth. Okay, you're buying the brand name. You're buying the brand itself. So, that's sort of the art and the science to it combined.
Well, and one of your favorite sayings on here is that investing is really the ultimate game of relative selection. See, I can't even say it as eloquently as you. But
investment is the discipline of relative selection. Thank you, Sid Cottle.
There you go. But it's not. I mean, there are thousands and thousands and thousands of things that you can decide to invest your money in, right? I mean, not just companies. You've got crypto, you've got bonds, you've got real estate, you've got all these different things that you can choose to buy for investment purposes and to grow your wealth. And it's interesting. You can have different disciplines about, how do you say we have to isolate the losers from the winners. 100 different investors may have 100 different processes that they go through to do that. Some are going to say, if you don't have growth, then we don't want to touch you. Others are going to say, if you don't have a certain amount of financial health and financial strength, then we don't want to own you. Others may, just look at, where you're positioned in the markets, and others may just look at technicals. There are a lot of different methodologies for doing that, but you can get yourself, if you just apply one methodology to your practice, then what you might end up finding is, okay, I'm only going to buy the 50 best companies that are out there based on growth. And then you put it together, and lo and behold, 48 of the 50 are tech. Oops, now we're over concentrated in tech. And you can say, okay, I'm only going to look for financial stability. And you get done constructing your portfolio, and you've assembled a portfolio that's 90% consumer staples, right? So there's that part of the practice of putting together the right portfolios also, and making sure that you're not overexposing yourself to just one metric in all of your portfolios. But there has to be some method to the madness, or science to the art, so that there's got to be some way to filter down all these different choices down to something that's a digestible portfolio.
Sure. And honestly, one of those things we start with is banks earnings. I mean, if the economy is going the wrong way, banks are not going to do well. They're not going to do well at all. Okay.
Yeah.
And we've seen financials do well this year. Okay. We've seen financials do well this year. We saw Bank of America post 11.2% earnings growth last week. Okay. It's doing great. JP Morgan, posted great numbers so far. Okay. And if we want to sort of marry AI and banks, you have to look at sort of the entire AI food chain. Okay. Let's start with NVIDIA. NVIDIA it's their chip. They created it. It's their secret sauce. Well, who manufactures it for them? Who actually brings the raw materials together to produce that chip? Okay. That's Taiwan Semi. Okay. And then who takes NVIDIA's chip after it's produced, and they ship it to your Microsofts, your Googles, your Amazons, your Salesforces, and they can apply those very, very powerful Blackwell AI chips with the best software available. Okay, so that you're and then it can make their clients, their customers, their human customers, their companies far more efficient, far more profitable. Okay, that's the AI food chain, and Goldman Sachs believes in this 100%. They are pushing all the way into a global AI infrastructure and data centers. Okay, and back to the conversation I had with the client this morning is I said I'll bet, I said I will bet you a dinner that in 5 years, north of 85% of all chips manufactured are going to be AI. They're going to have to be. Okay, because it's like anything else. We have the new smartphone. Now everything is going to be AI. Google, so when I go into Google, I use Google AI. Okay, instead of just the normal Google search, and I think like Google AI is really, really good. But so all of these companies, all of these big server farms now, all these data infrastructure farms are going to have AI chips in them. Okay, I'm not so sure about your normal, like your desktops or your little laptops or anything like that, but those are going to have to be able to process artificial intelligence going forward. So Goldman Sachs thinks it's going to be incredible, and there's a multi-billion-dollar globally financed AI data infrastructure, and that's going to be really good for credit markets. Okay, because banks are going to want to lend on those because it's going to make, obviously, there's going to be a tremendous amount of customers available for these data centers. Okay, because it's going to make their companies more profitable. Okay, and you see that, and again, back to the food chain, the second derivative food chain of all of these customers of these AI producers becoming far more efficient and far more profitable across, down from little companies like ours to, car dealerships, to home builders, to accounting firms. I was talking to actually, when I was in Denver this week, I was talking to our corporate CPA, and they do these big retreats every year where they go over the new tax regulations and tax laws for the upcoming year. And it's a whole thing. It's several days. And he said, he's the CEO of the firm. They have a pretty large firm. They have about 70, 75 CPAs there. And he said, normally it takes him about 2.5 to 3 weeks every year, about 100 hours to schedule and design the retreat that they all go on. This is what we're going to do, blah, 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 blah. Okay, it's a whole thing. It's a big deal for them. Well, he used AI, and there's a software that the accountants use now it's AI based, and he used that. It took him 6 hours, and it was perfect. So he saved himself 94 hours of work. Okay. Yeah. Now that was 94 hours he could apply to other things for his clients, right? And again, you're not going to lose your job to AI. You're going to lose your job to someone who uses AI, because now my accountant, his time is freed up to do more things, like find me more deductions.
Right. Yeah. That's important. That's very important. At the end of the day, we got to get more money in Matt's pocket. That's
why we're all here.
That's our sole purpose for existence. Oh man, well, always a pleasure for listeners, viewers, loyal fans, whoever is out there listening. Matt's clients, thanks for your time. If you were interested in speaking with Matt, you can give his team a call at 702-655-8300 or visit intelligentinvestment.com to learn more about. I will say this: I remember saying this to you when we first met, though. You won't learn a whole lot about Matt by going to intelligentinvestment.com. You don't even have a picture of yourself on your website. If you want to see Matt's face, you have no other choice but to watch Intelligent Investment Live every Friday at 1:00 Eastern on the Wealth Partners Network.
Which we apologize for every week. We're sorry.
But to be as smart as he is, he's also quite humble. So he's got a great team over there, though.
I surround myself with. I happen to have, and I'm sorry for anyone who's listening to this who also has a staff. You guys have probably the second best staff, or the third. You don't have. I have the best staff. I have the best people. They make me look so good. I don't deserve them. They're too good.
Well, we are. got to make sure I say this too. We're just here for entertainment and education purposes only. So don't listen to anything that we said about NVIDIA and all these other companies. We're not telling you what to buy or what to sell. We're just, kind of using those as examples for education purposes. So got to make sure I get that in there as well. Matt, we'll see you next week. Always love chatting with you, bud. Everybody else, stick around for the disclosures at the end. I'll see you next week, bud.
See you.
See you. Bye.
Discussions in the Intelligent Investment Show are for educational purposes only. The information presented should not be considered specific investment advice or a recommendation to take any particular course of action. Always consult with a financial professional regarding your personal situation before making investment or financial decisions. The views and opinions expressed are based on current economic and market conditions and are subject to change. There is no guarantee that any statements of future expectations will come to fruition. All investing involves risk, including the potential for loss of principal. Securities offered through United Planners Financial Services, member FINRA, SIPC. Advisory services offered through American Retirement Planning Group, ARPG and United Planners are independent companies. Garrett Lill and Wealth Partners are not affiliated with ARPG or United Planners. Any endorsement that I may have given during this recording, it is important to note that I am not a client of ARPG. The views expressed should not be considered representative in any way of my past, present, or future experience with Matt or ARPG. No incentives have been provided to me in connection with any endorsements I may have given on the Intelligent Investment Show. Investing involves risks, and there is no guarantee of any future results, performance, or success.